market is undervalued or overvalued, or a company is undervalued or overvalued.
Imagine if there was a perfect indicator that could show you in real time when stocks are overvalued or undervalued. And what if this tool could predict market movements with unprecedented accuracy? Introducing the Buffett Indicator, one of the most respected and widely used benchmarks in the investment world. This indicator can give you valuable information about how the market behaves in different economic periods and save you a lot of money. Let's take a look at how it works and also if the market is overvalued now and if we should be wary of our portfolios. Hi investors, this is Milan from 𝗕𝗂𝗶𝚀. None of the information in this video is investment recommendation. Always do your own detailed analysis. The Buffett Indicator, also known as the market capitalization to GDP ratio, is one of the best known and most valuable tools for assessing stock market valuations. Described by Warren Buffett as the best indicator of the overall value of the stock market, this metric compares the total market value of all publicly traded stocks to a country's gross domestic product. In interpreting this indicator, a ratio higher than the historical average may indicate that stocks are overvalued, while a lower ratio may indicate the opposite. This simple but powerful tool provides investors with important insight into how stocks are valued in the context of economic output and is thus widely used by many as one of the primary benchmarks when buying a stock. In recent months, we have witnessed dynamic market developments. Market capitalization in the US is reaching record levels and stocks are at their peak, which increases the importance of tracking the Buffett Indicator. This indicator currently indicates that the market is overvalued. For example, in September 2023, the Buffett Indicator was around 200%, which historically indicates a potential market bubble. The Fair Price Index on 𝗕𝗂𝗶𝚀 gives you a clear indication of which stocks are over or undervalued, which is really valuable information in the current difficult market situation. At a time when inflation is falling and economic indicators point to stabilization, it is important to be cautious. Right now, the Buffett Indicator is at levels that indicate a high market valuation. According to the latest data, the ratio of market capitalization to GDP in the US has reached all-time highs, which is causing concern not only among investors. Some experts say that this indicator may signal an impending correction or even a bear market. Combined with factors such as declining inflation and still high interest rates, the current market environment is still one of the most difficult in years. Earnings season, which is now underway, can affect stock prices, so it is important for investors to keep an eye on how individual companies are reacting to economic changes, what outlooks they will provide, which are now extremely important, and how they are performing compared to analysts' expectations. The fact is that inflation in the US has been falling in recent months, signaling that the economy is stabilizing. Recent statistics show that inflation has fallen from 9.1% in June 2022 to 3.7% in September 2023. This decline may help to calm markets, but fears of a market recession still remain. Investors should be cautious as falling inflation and the Fed's monetary policy through the start of interest rate cuts may impact sector performance. For example, the technology sector, which was heavily supported during the pandemic, now faces challenges as rising financing costs may slow corporate expansion. Now that we are in the midst of earnings season, companies can provide valuable information about their performance and prospects. Big players like Apple and Microsoft have already announced their results. You'll find these summarized in a flash news on 𝗕𝗂𝗶𝚀 right after the announcement, with links to the presentations in the stock details. Another factor affecting the markets is geopolitical events. Tensions between the US and China, as well as the situation in Ukraine, can have far-reaching consequences for the economy and the investment environment. These external influences can cause markets to react with high volatility to any new news. In the context of the Buffett Indicator, it is also important to note that even though markets are at all-time highs, there are still opportunities to invest. High valuations can cause concern, but they also open up opportunities for value investing. If you want to know not only the fair price of every stock mentioned in this video and be at the heart of the stock market, become a member of 𝗕𝗂𝗶𝚀. Plus you get detailed stock analysis, news on portfolio companies, or a portfolio tracker with dividend calendar. In practice, investors can look to Buffett's indicator as a signal for their investment strategies. if the indicator is pointing to an overvaluation, it may be time to rebalance the portfolio or to place more emphasis on value stocks that are less dependent on market sentiment. During periods of high valuations, managers often increase exposure to assets that are considered safer, such as bonds or gold. Other tips from Wall Street analysts for investors include watching sector trends. For example, if Buffett's indicator is high, but certain sectors, like technology or energy, are still showing strong growth and innovation, it may be wise to focus on stocks in those sectors. It's also important to keep a long-term perspective in mind. Markets may be overvalued, but investing in quality companies with strong fundamentals can still yield gains. Finally, let's look at how the Buffett indicator fits into the overall investment environment. Every investor should keep in mind that no indicator is perfect, and it is important to combine different tools and approaches for an overall investment strategy. In the current market environment, where stock prices and economic indicators are constantly changing, flexibility and a willingness to adapt is key. Remember that a long-term investment horizon and adherence to value investing principles are the best weapons in any market environment. By paying attention to the Buffett indicator and current market trends, you can better understand market dynamics and make informed decisions about your investments. In order to achieve this, 𝗕𝗂𝗋𝗋 is fully at your disposal with all its features that will help you to gain an overview of the entire market, but also to value the company. In our last video, we broke down the now much discussed Volkswagen stock, which is already down 23% this year. We took a look at the automotive giant, and thanks to Tuesday's results, we found out how the company will fare. You can find the full video on YouTube, 𝗕𝗂𝗋𝗋. Good luck with your investments.